Now, the Reserve Bank of India has released a draft norms where it proposed to scrap the foreclosure charges on floating rate loans for retail and MSME borrowers. Now, what does this move entail for borrowers? What is this going to mean for the entire sector? Let's go across to Anurag Joshi for more details on this proposal. Anurag.
The Reserve Bank of India has released a draft circular on the levy of foreclosure charges and prepayment penalties on loans. Regulated entities are to permit foreclosure or prepayment of the floating rate loans for purposes other than business. This has been proposed by the central bank in a draft circular which has been circulated to the stakeholders, and the stakeholders must reply by March 21. According to the circular, no levy or charges or penalty for foreclosure or prepayment of floating rate loans are to be made for individuals or micro and small enterprises. The rules are applicable irrespective of the source of funds used for foreclosure or prepayment, and the instruction for dual special rate, which is a combination of fixed and floating rates, will depend on whether the loan is on fixed or floating rate basis at the time of the foreclosure or the prepayment. The foreclosure or the prepayment of loans is without stipulating a minimum lock-in period, and the regulated entities cannot levy any charges or penalties if the foreclosure of the prepayment is at the instance of the regulated entities. The regulated entities shall not levy any charges retrospectively which has been waived off and which was not disclosed in advance to the borrowers.
Thank you so much, Anurag, for getting us all those details.